Okay, there we are, into session 7, believe it or not. We're a couple of minutes behind, so apologies for that. We're going to bring our next speaker, Michael Buchbinder from Nordic Funder, into the room. He's waiting patiently. Now, a lot of people are waiting for this presentation. The registration has spiked up, so there's more of you here than there's been all day. So clearly, interesting topic about funding trading accounts, and that's why we're grateful to Nordic Funder who are sponsoring this event. The button that you've seen along the bottom of the screen throughout the day, thanks to our so that takes you to the website for Nordic Funder and explains some of the rules and processes that you need to go through in order to access funds to trade with. Michael Buchbinder, founder of Nordic Funder, welcome. Thank you for joining us.
Thanks for having me, Simon. Thanks for having Nordic Funder, and thanks to everyone for sticking around. I know it's late in the afternoon and you've had lots of information coming at you, so everyone might be a little bit tired and full of information.
We're all good, and it's been a very technical day. We've done a lot of the charts, and with the last two sessions, we've looked a lot more at the stock markets. So there's a lot going on. Just to give everybody a bit of a background, my name is Simon Campbell. Round the Clock Trader is my online event. I also do physical events and one-off webinars and so forth. So if you're just joining today for the first time, welcome. It's good to see you. We've got a huge amount of new names and people here for the first time, as well as a lot of our regulars. So it's great to have you as well. Michael runs Nordic Funder. We've known each other for a few years. We sort of met during lockdown. Really, that's when we first started doing some of these sort of online boot camps and things. But we actually finally got to meet in person in London in November, which was fantastic. When you came along to our IX show in London, so that was really great as well. We're here to.
It was a great event that you put on, Simon. Sorry to interrupt, but it was a fantastic event and lots of traders to meet over there. It was like one of the best trader events that I've ever been to. With meeting so many traders, everyone was very interested in everything that was going on over there. So. It was, as I heard in the last one, April 20th. I'll put that in the calendar.
April the 28th. April the 28th.
Okay.
It's the last Friday of April. So yeah, we're going to work hard to make it better than the last one. That's the challenge with these things. So it'll be terrific to see you again. Well, as I just said before, there's more people joined just in the last 5 or 10 minutes. I don't know if you can see the numbers at the bottom of the screen, but we have a sort of a total registered, and then you have a number that says how many people are actually in the room now. So we've got about 100. Well, it's about 140 just a couple of minutes ago, and that I think is because of what we're talking about. It's a very sort of hot topic at the moment about getting into trading, learning all the things you need to do, but unless you've got some funds to trade with, it can affect not only the way you trade, but the potential that you can earn and the time it might take you to earn the sort of money that you want to earn. So that's where this route to funding is really important part of it. Lots of different companies doing it different ways. Could you tell us about Nordic Funder first of all, and then maybe we can open out for some questions later on?
Yeah, sure. So I hope everyone here has got lots of questions because I don't like to talk that much. So the more questions, the better it is to help keep me going. I've prepared a bunch of slides. We can walk through those. I'll explain about Nordic Funder, the program, and ways to get funded, and some, I guess, pros, cons, and things to watch out for, tips for success. Nordic Funder is a funding company. We are partnered with a hedge fund, so that's where we get the money from to be able to fund the traders. And I guess I think that's one of the differentiating points that really makes us different is we really want our traders to win. I know going through the forums and stuff like that, traders often say, well, it feels like they're just after my assessment fees. And no, we're after great traders. That's what we're looking for. And should I get started, Simon, or and then we can have a few questions back and forth?
I think that would be great, Michael. Just to tell us a little bit more, if you want to maximize, put the slides into presentation mode. We'll see just the slide.
Okay. It all of a sudden takes up both my screens, and then and I feel like a grandpa over here, not knowing how to work the computer. But I guess everyone can see the slideshow.
Looks great. Yeah, we're seeing it now. So let's run through. Graham's already said he's looking forward to the presentation because he's been involved for a year with another provider, and this is something we'll talk about later on because there's all sorts of different ways that we can do this. So I know that Nordic offers some things which I like myself. So let's get on to that later. I'll hand over to you for the moment.
Yeah, sounds good. All right, well, welcome to Nordic Funder. This presentation is for educational purposes. Disclaimer, disclaimer, disclaimer. I'm Michael Buchbinder and partner and founder at Scandinavian Capital Markets, an FX brokerage, and Nordic Funder, a funding company for traders looking for extra capital. Oftentimes, traders, they get into the markets, and I think getting access to a fair amount of capital to trade is probably one of the hardest parts about trading, because if you're just trying to do this part-time and using a small piece of your portfolio, it's definitely quite difficult to scale up and get to the proper amount of funds to make some good dough in this business. So what kind of trader are you? How do you trade, and are you the best? We're really looking for great traders that are out there, people who have developed their strategies, and people who have developed an edge in the markets. Because we're funded by a hedge fund, we have tons of money behind us, and what they're really looking for is great traders and great trade ideas. And I guess the catch with us is we're able to monetize the data, and that's how we're able to give you accounts, fund those accounts, and then trade. And then after reaching a level of success, I guess the carrot at the end is not only do you get to take out your profits, but you also get a chance to kind of partner up with a hedge fund and trade additional funds with them. So we invest in traders. We're looking for the best. That's as you see the number of programs out there, getting traders capital and helping them get larger profits is really what this new industry niche is popping out for. So as you know, funded trader programs are looking to give traders access to more funds to trade. There's obviously, everyone knows FTMO that's out there. Some things that make us a little bit better are we allow Forex and indices, CFDs to trade. We have an account builder, so you can add certain preferences to your accounts. We have no time constraints for reaching those targets. Oftentimes, you'll find that sometimes there's time limits. You have to make a certain amount of profit within a certain amount of time. And that kind of forces you to chase the market and maybe make bad decisions. And we don't have any time constraints, which means that we want you to do what's best for you and not chase the markets and overtrade. I think that's probably what those rules get you to do, is to overtrade and reach the targets within a certain time period, which oftentimes leads you to fail those assessments and have to restart. You go live once you get past the assessment phase. We have add-ons that allow you to trade up to 90% and get profit splits. We have C-Trader, we have MetaTrader 4, and soon, within the next few months, you'll see MetaTrader 5, hopefully. So I guess those are some of the key things that make us a little bit different than others that are out there. I guess a little bit before I go into that, how it works is you purchase an assessment, and we have packages ranging from where you get to trade up to $25,000, $50,000, $100,000, and $200,000 and $400,000. It starts with $250 for a $25,000 assessment, and it goes up to $3,000 for a $400,000 assessment. And once you reach 10% profits targets on whichever assessment package you select, you will be able to then go straight into a live account. So you only have to go through one assessment. You don't have to go through two assessments. And once you get to a live account, once you start making money, you'll be able to withdraw that money as you please. The keys are staying within the rules and the targets. You don't want to reach a 5% drawdown over the lifetime, and you want to stay within a 4% max daily drawdown, trailing drawdown. So let's, and also the scaling plan, before we jump into this, the scaling plan is also really, really cool. I think it's for about $1,200. You start with a $100,000 account. And once you make 10% on the assessment phase of that $100,000 account, you will go to a live $100,000 account. And now this is where the scaling begins. Once you make about 10% on the $100,000 live account, we pay you out your profits, and then we move you directly to a $200,000 or $250,000 account. Once you make 10% over there, we pay you out your profits again, and then we scale you up to a $500,000 account. And once you hit 10% profits on that, we pay you out again over there, and then we move you to $1 million account. So I really like the package for the scaling up, because it gets you to $1 million within I guess a few times of hitting your 10% targets. And each step of the way we pay you out, so you don't have to worry about what happens going in between each of the phases, and all along the way you're collecting money, which I definitely think is a great feature of the program. Beat the challenge in the assessment phase and get access to $1 million. And you can keep up to 90% of the profits, which is one of the add-ons that we have available. The key for trading our funds versus your funds is, one, you're getting hopefully more funds to trade than what you would currently have access to. And you're minimizing your downside risk and maximizing your upside risk, where minimizing the downside risk is you only have the opportunity of losing your assessment fee, which is minimal in comparing the funds that you're able to start trading. It's 1% or less of the funds that you get access to. So that if you're good at statistics, you know that having less downside risk and more upside, and increasing your upside risk is all part of the trading edge about increasing your profits. And I guess in the past you've probably heard of the prop firms, and I when I was in the show in Orlando, the Orlando Money Show, a lot of the traders came up to me over there and they said, well, isn't the prop trading model where you put up $50,000 to $250,000 of your own capital, and you get access to 500K or $1 million, and if you lose 50,000 from that, then they cut you out. So really all they're doing is just giving you extra leverage rather than giving you more upside for your capital. So with these programs, you get to risk way less capital, and you have essentially way more leverage towards your starting amount of your capital. Well, I guess I'm jumping ahead of the slides. Funded account versus risking your own capital. Like I just said, the funded trader provides great opportunities with much less risk. And let's just jump into this next slide, and we can kind of dive into the numbers a little bit. If you have, let's just say, $400,000 of your own funds, and you were to buy an assessment package for $3K, if you were to lose while trading that 400K portfolio, risking $3K would only be 0.75% of your total portfolio of $400,000. Let's say so the risk of ruin at $3K per $400,000 is you'd have to have 133 bad attempts at the funded trader model. So, and if you get to keep up to 90% of your profits, you really risk a heck of a lot less money and still trading the same type of capital that you would have in your 400K account. And you get to keep up to 90% of the profits with only potentially losing 3K. Let's say you're trading your $400,000 live in the markets and you draw down $30,000. That is real money that's being lost. That's a real part of your portfolio. And we all know that everybody really works hard to build their wealth and to build their savings. And to lose 30K out of $400,000, that's a big chunk. That's 7.5% of your portfolio. And all it takes for the risk of ruin at that point to just decimate your portfolio is 13 bad trades versus 133 if you're using the funded trader model. So from a perspective of risks to reward, you have much less risk and you keep the same type of reward and the possibilities that are out there. From our perspective, and I hope from your perspective, the value is really there in purchasing the assessment packages because you're not risking all of your capital at once, and at the same time you have the opportunity of achieving all the gains from it without taking the chunks out of your portfolio. And just to make I guess hammer home that picture, taking a small piece of the pie equals small risk, but you want big profits so you can compromise. So risking only, again, just I'm beating home the story from a $400,000 portfolio, risking $3,000 on the assessment and trading $400,000 of the equivalent capital. You're only risking 0.75% of your portfolio, whereas if you hit a $30,000 drawdown, which is if you hit that, that's 7.5% hit to your portfolio. So you're definitely going to feel the sting from that perspective. So trading your own funds versus trading our funds, and let's face it, lots of people who are in the real estate game as investors, they all get rich by using other people's money, by taking loans from the bank and by leveraging that up to make higher returns. So effectively, by leveraging up and using by purchasing an assessment and using the hedge fund's capital, you're using other people's money, and you're and the only risk to yourself is losing your assessment fee from there. So the risk to reward, the gains, and the risk to your capital are much more in your favor by going after an assessment package. And we all know the markets can be volatile. You definitely don't want to risk your own capital if you don't have to. And if you get to keep 90% of the profits, you definitely made that gain. And I feel like I'm repeating myself over and over and over again, but it is important to be able to discuss and understand the true benefits of trading other people's money and leveraging your own capital. And if you have 8 attempts at a funded trader program and you're from a $400,000 portfolio purchasing $3,000 assessments, that's only a 6% hit to your portfolio. Whereas if you have 8 bad trades of $30,000, you've therefore decimated your portfolio and you've got 60% loss in there. Just the power of leveraging other people's money and using the assessments, it just gets more and more clear as time goes on. And if you're truly dedicated to the markets and truly passionate, I think after a certain amount of tries, you will get to the I guess pot of gold at the end of the road. But what if you don't have to compromise? What if you don't have to risk your entire portfolio and trade all of your own capital? What if you could trade other people's capital with the funded trader programs and Nordic Funder? So just to put things in perspective, everybody's always looking for more money. If you have a $3,000 trading account, because we're sticking with that 3K number, 20% return on a 3K account is only $600. And I know I've traded myself. I do trade, and I know that you trade. Getting 20% on your account, that's a lot of work. You put a lot of effort into there, and you really and you want to reap the rewards of the profit potential. So making $600K on $600 on 3K of your trading account, that doesn't seem like a lot of money for all the time that you've really put into the trading, put into your strategy, put into the markets, because we all know there's sleepless nights, there's endless days, and there's a lot of research and thought that goes into planning your trades and beating the market. But passing a 3K challenge gives you access to $400,000 of live funds. And reaching a 20% return on $400,000 is $80K profit in real money. And being able to capture that is a heck of a lot. And the same amount of risk for 133 times the amount of profit. That really speaks for itself. And if you can, and for all that work, you put the same amount of work into getting the 20% return for a 3K account, and you put the same amount of work getting the 20% return on a 400K account, but you've made 133 times the amount of profit without risking all of that $400,000. I hope the image is getting clearer and clearer of what the benefits are with regards to a funded trader program. Well, let's see. With funded trader, 20% return on 400K is 80K. Maybe I'm just repeating myself again. 20% return on 400K is 80K, and you only risk 3K of your own capital. Without the funded trader program, 20% return on 400K is 80K, but you've put your entire capital at risk. For anyone there that knows risk to reward, you can do the risk to reward here, and you're with putting more capital at risk and getting the same amount versus putting less capital at risk and getting the same amount. I think it's a no-brainer. Why aren't you managing the big bucks? Sometimes it's a matter of, well, you didn't come from a rich family. Sometimes it's a matter of connections. So, well, how do traders raise assets? Well, they got their own money. They get a loan from friends and family, and trust me, you do not want to trade on money from your friends and family, because God forbid if you lose that, it's not a fun conversation to have with them. And trust me, I've been there, I've done that, and it's taken me time to pay everyone back, because the amount of integrity that I know each and every one of you has, you took that money, being able to promise gains and wanting to and provide safety to the capital, and that just it's not a mountain you want to climb up, and not many people can climb back up that mountain. If they do that with their friends and family and gain their integrity, their trust back, it's just difficult. Or you've already been in the industry. Hey, you work at a bank, you're trading money for the bank, you've got a track record over there, you got all the tools, everything behind the bank to help you get that, and then you have the connections, and you can go raise some capital and start a limited partnership fund or a little hedge fund, and you've got the connections. But not everybody does that. Not everybody has those connections. And then there's scraping your way up the barrel, just hard work from the start, making connections and seeing how you can do it. And why do people want to trade? Well, you can do it better. Funds are underperforming. New reports find almost 80% of active fund managers are falling behind the major indexes or indices. Well, if everybody knows Kathy Wood, unfortunately, she's been a martyr to the tech industry, betting heavily on tech funds. It's easy to make money as money is being pumped into the markets, and everybody's on the Kool-Aid, and the markets are going up, up, up. But once you're seeing interest rates rise, inflation go higher, and money being sucked out of the markets, being sucked out of savings, and earnings are being challenged and they're no longer getting the valuations that they used to get as markets are kind of sobering back up. Some of those fund managers are underperforming, and yeah, as an individual investor, sometimes you could be doing it better than them. So how the program works, well, we've already discussed that, but we can go into it again. You first purchase a test or an assessment. You show us you can make the profit, reach 10% profit with a maximum of a 5% drawdown and a 4% daily loss. And there's no time constraints there. The reason why we give you the assessment is you have to have skin in the game, and you got to show that you're able to properly manage live funds and do it responsibly. 2, trade. You pass the test and you get a live account with up to $400,000, or you can go to the scaling plan that gets you up to $1 million. And it starts as low as $25,000, which is for a fee of $250. And then step number 3, make profits and withdraw them from your live account and reap the rewards of your hard work. Some cool things about our packages. We have account builders. So there's different add-ons that you can do with the account builders. You can choose the size of the account that you're going to get, 25K, 50K, 100K, 200K, 400K, or the scaling program. You can go from 10-to-1 leverage to 20-to-1 leverage. You can add on other features where you can keep 50% of the profit, or 90% of the profit, or 70% of the profit. You can also add features that allow you to have trades open over the weekend and carry those trades over the weekend. You can also add extra leverage, 20-to-1. So I know when you go to certain funded trader programs, they kind of limit you into what you can or can't do. And with the add-ons, they allow you to customize certain settings to your strategy. There's a built-in feature where you have to have stop losses for each trade. You can add add-ons there where you can take away those mandatory stop losses, which allow you to be more flexible with your trades. But we think having stop losses is a good idea because that keeps you within your risk. You know what you're risking per trade, and you don't go for a ride. And the worst thing you can do as a trader is move your stop loss and then lose even more money. So that's a tip to success. You don't want to lose. You never want to remove your stop loss and lose more money. It's just bad risk management, and you really beat yourself up at the end. And trust me, I've made those mistakes myself, and that's what I'm here for, is to share some tips for succeeding. I'll walk you through the different programs. With the $25,000 account, it starts at a $250 purchase of the assessment. Your profit target is 10%, which is $2,500. The maximum trailing drawdown is 5%, and the max daily loss is 4%. With the 50K account, the purchase price is $500 plus any add-ons that you would choose. Your profit target of 10% is $50,000. Your max trailing drawdown is 5%, and your max daily loss is 4%. And then moving on to the 100K and 200K packages, your target profit on the 100K account is 10%. You want to make $10,000. The price starts from $800 for the assessment. And again, the max daily loss of 4% and the max trailing drawdown of 5%. Moving over to the 200K account, the price starts from $1,500. The maximum daily loss is 4%. Max trailing drawdown is 5%. And your profit target is $20,000 over there. Account sizes. We'll get into the $400,000 package, which we've been talking a lot about today. The price starts at around $3,000 plus any add-ons you'd like to put in there. You have your max daily loss of 4%, your max trailing drawdown of 5%, and then your target profit of 40K that you want to hit, which is 10%. Move along to the scaling plan. And I hope everyone's getting some questions ready, because hopefully we'll get to the questions part very shortly. But before
We are,
that,
Michael. Yeah, there's lots of questions coming in just as you've been speaking. So this is great. Anybody else got any other experience with working with or raising funds? Please volunteer them in the chat box so we can have a look at them. This is great.
yeah, throw them at me. I'll be done in about 6 or 7 slides, hopefully a few minutes, and then we can get into the questions and we can just start having a little chat about stuff, because like I said, I don't like talking too much. I like to have a conversation rather. So I'll just get back into the scaling plan. It starts at $1,200. You get a $100,000 account. Your profit target is 10% over there. Once you hit 10%, we put you to a live account, and you get 10% on the 100K account, and we pay you out your profits over there. We move you up to a 250K account. You hit 10% of your target over there, 25K. We pay you out your profits split on that, and then we move you up to a 500K account.
Michael, just for clarification, someone is that a beginner here might not know what the maximum trailing drawdown means, and I mean maximum daily loss is self-explanatory. What about, can you just explain what a maximum trailing drawdown?
Yeah, it's okay. Let's say you have a $100,000 account. Your trailing drawdown starts at 5%. That would be $5,000 of the $100,000 account. Then you make $1,000 profit on your account, and we take 5% of that, which would be, I guess, $50, and your trailing drawdown would be $5,050. I hope my numbers are correct with the percentages, but does that make sense?
Yeah. Yes.
Okay. Everyone who's watching, please, you can correct me on my percentages if I was there, but I'll just say it again. A 5% on $100,000 is $5,000. If you make $1,000, I guess 10% of 1,000 is 100, so 5% would be $50. So your maximum trailing drawdown would expand to $5,050, and you want to make sure you stay within that range.
Mm-hmm. Thank you. Fantastic. And then the maximum daily loss
is 4% of your account equity. If your account grows, it includes the equity, and that gets set at the end of every day. So if you made money in today, your max daily loss will grow the next day. It'll include the equity profits that you captured from today in tomorrow's drawdown. So it doesn't affect it in the current day in live.
Got it.
In live action.
Fantastic. Okay. So there's quite a few questions coming in, which is really good. Do we need to? Sorry, I interrupted you there. You still got
no problem. I will let me finish and get into the do's, the don'ts, and some of the tips to succeed, and then we can dive into the questions if that's okay. I promise I'm not going to take a whole hour to speak. Just maybe another 10 minutes, 15 minutes max, but hopefully no more.
No, this is absolutely great. Thanks, Mike.
All right, cool. Keep them coming, everyone. I really appreciate everyone who's listening and watching. So yeah, I think I stopped at, you make 10% on the 250K account. We pay you out your profits there. We move you to a 500K account. You make 10% of the target over there, and we pay you out your profits from that. And then we move you to $1 million account, and then you trade that. And all throughout, the hedge fund is watching, and they always might have some feedback. If they really like your strategy in between, we could always reach out to you and kind of get you involved at some point. So we're really looking for talent, and that's the main thing that's really driving what we're doing behind us. Oh, I see it's 10:38 already on my thing, so I definitely want to speed up, so give us lots of time to So different options that you can add. You can add leverage from 10-1 to 21 leverage. You can increase the profit split from 50-50 to 70-30 or 90-10 in your favor. There's a mandatory stop loss, so you can add on via making it optional. And then there's weekend trading that you can allow weekend trading to happen, so you don't have to close out your trades by the end of every week. What can you trade? You can trade Forex, you can trade metals, you can trade indices, and we recently took off crypto because it was getting too volatile, but we've added back on Bitcoin and Ethereum. But we've taken away most of the other crypto pairs just because we want to protect clients from the volatility that's out there. But that doesn't say we might add some more cryptos in the future. What makes a difference? We want you to win. There's no time constraints, means you don't have to force any bad trades. You have room to let your trades develop, your strategies develop, and your trades to kind of gather points. It's not about using maximum leverage and getting only a few points. It's about getting as many pips or points from the market as possible. That's what's really going to show us that you're a great trader, and that's what's going to determine your success in the long term, is your ability to take points and pips out of the market, not just get a few pips on really high leverage. And I've seen traders who's like, I put 100 lots at a time and I made $10,000 here, $10,000 there. That's not good trading. That's being pretty darn risky. And also understanding you have your own life and your own pace. So that's why we don't have the time constraints. We understand you might be doing other things. We don't want to trap you behind a computer to trade X amount of percent within 10 days, 30 days, and force you to overtrade. We want to let you do your thing. Tips on succeeding: don't overtrade. That's the number. If you chase the market, if you keep trading, overtrading, that definitely will affect your profitability. Take your time. Don't force things. Watch your leverage, because more leverage you use, the higher the dollars per unit that can go in your favor or against you. So you want to, like I said, you want to be taking points out of the market. Build a plan that suits you and your style. So understanding your emotions, understanding how you trade within the markets. I like to set pending orders and let the markets do its thing and just take me into the momentum. But oftentimes the market can whipsaw, and that's the bad part of my strategy. Is sometimes momentum goes up, it pushes me into the market, and then it goes back down. So having some tight stop losses will keep it there, but sometimes it comes back down and then shoots back up. The market is a tricky thing with its moves. You want to follow the rules. So you want to read the rules, understand them. Each funded trader program has different rules. So understanding the rules and understanding what you're getting into is a huge point for success. I would say don't marry a bad idea. You can marry a bad wife, but don't marry a bad trading idea. Well, hopefully make good decisions there too. But sometimes you're stuck to a trade idea. You think that the markets are going to go a certain way. You're saying, oh wait, the US 30 is going to fall because the economy's worsening, prices are rising, profits are going down. But at the same time, there's so many the money flows going into the markets from big investors kind of affects the markets just going straight down. You think a recession is going to happen, but it takes its time. The recession might come the end of the year. It might not come right now. And you could be stuck thinking the market's going down and holding a bad trade when you might have the right idea, but the timing isn't right. So I like to say it doesn't matter whether the markets are going up or down. You should make money going either direction. Making money is more important than being right. So it follows don't marry a bad trade idea. And what I just said, whether the market goes up or it goes down, it doesn't matter to me. I want to make money. I don't care about being right. And making money, it shows you, is the determining factor. Stop risking your own funds. Trade our capital. We cover the losses. What to watch out for. So some of the do's and the don'ts in the industry. I know there's something out there called instant funding accounts right now. What are they exactly? So instead of purchasing an assessment, you kind of put a small amount of you put a small amount of your capital in, and they give you live funds to trade, and right away without having to pass an assessment. And I know that might seem attractive, but it's really important, like I said, reading the rules for everything that you're doing. And well, I said the pros are you get to access funds right away, but the cons are the rules. You really have to watch out. I've seen some pretty outrageous rules where you put $150 into getting live funds, and the maximum stop loss there, or the maximum drawdown, is like $130 of your own funds. So really, like, if you're getting a $10,000 account, like, it's pretty easy to lose $100 right away, especially on trading. If you put 0.10 of a lot and it goes 100 pips against you, that's $100 or more. If you put one lot, it goes 10 pips against you, you're out from the start. So it's read the rules for those instant funding accounts. They seem attractive, but they're pretty dangerous. They don't really give you a chance to win unless you really understand the rules and trade really low and slow. And I don't know if that defeats the purpose or not. So they have tight drawdowns, and the rules to withdraw funds are very tricky. So read the rules, understand what you're getting into before you get into an instant funding account. I feel like that kind of is driving the industry into a race to the bottom. It's important that you find quality over quantity or ease or whatnot. So they're essentially selling you what you want, but what you want to hear, but you got to watch out. Sometimes what you want isn't really what you want. Some things to watch out for when looking for different programs that are out there. Some have 2 assessments to pass, which makes it somewhat really difficult I think if you can show that you demonstrate your ability to trade in one assessment, why should you pass a second assessment? So if you can find those one assessment places and get access to capital sooner, but you always do want to watch the rules and see if there's any caveats there. There's also time limits to complete the assessments, so they force you to overtrade. You have to do it within a week or within 30 days, and that doesn't allow you to really build a strategy and let it execute. So like I said, the key is to take points out of the market, and that's what's going to determine a winner over the long time. Otherwise, with having the short time limits, it forces you to over leverage on some trades and sometimes hit your drawdown limits. You also want to have minimum trades. There's also the minimum trades necessary to pass. Sometimes you want to have the programs make you have 10 trades, 20 trades, 30 trades, 50 trades. You already hit your profit target. Now, what do you got to do? Keep trading away and nibble away at your profits. So that's not really fun as a trader. And if you hit your targets and you feel like you've hit the profit target, why do you need to wait to hit another 50 trades? And then there's minimum trading days. Maybe you have to have at least 10 days of trading or 20 days of trading, and each day you need to put an order in the market. Those are some rules that I would recommend watching out for. Oh man, time is running quick. And all right, I'll leave everyone with trade our capital, get the best deals. We have a 20% discount code. Use round the clock Nordic when signing up to get 20% on any of the programs. And Simon, hit me with your questions. Everybody, thank you for listening to me. I apologize if I was repetitive in some points, but just trying to hammer home the point of why it's better to trade our capital than risking yours. And everybody needs more money to trade. So that's definitely a problem that's never going to go away.
Michael, thank you very much. That's great. I'm going to type that code in as we're answering these questions. That's 20% discount as a special off the cost of the programs. We'll rewind to Graham. First of all, looking forward to making the comparison between other providers. Graham also mentions that the second stage is probably possibly the hardest stage. I'm not sure what you're referring to there, Graham. Sorry, I lost the thread with that. Martin, interested to see what style of trading suits your rules. Is there? Do you find that the rules? I mean, it seems to me that the rules are very relaxed in this.
Yeah. So I guess I think when you can when you can purchase the add-ons of having trades open over the weekend, that allows you to hold winning trades for a longer period of time and let those trades develop. Otherwise, most of the other rules kind of pin you into J trading, and you gotta be in and out within the day, and stuff like that. So I would go back and kind of ask what your trading strategy is, and maybe we could understand with what your trading strategy is, why a certain program is better for you than others.
Sure.
But if you can email me at michael@nordicfunder.com. You can discuss what your strategy is, and we can talk about the different add-ons that might benefit you and help you with your strategy and passing these assessments.
Fantastic. I've just typed the Mike's email address in there. Ash is asking, do you have an online dashboard that tracks everything?
I believe, yeah, there's a user area, and you should be able to see that, and hopefully within the next couple months, there might be an app version coming out, so you can have everything, all the dashboards and everything on your phone. And I know what they're looking at is going to be pretty darn cool.
Fantastic. So it's that idea of just the visibility.
So, Ash, take my email and email me, and I'll keep you posted when like the app comes out. And I think you're really gonna like it. It's definitely gonna be something similar to FTMO. Hopefully, probably even better.
Steve, can you explain the scaling process again, please? I think that question was before you did actually explain it again. So, if you want to go back, you reiterate it, or you can watch the replay of this presentation. But
well, we can leave it to the end. If there's not any more questions, we can definitely go back and fill that in.
Sure.
I want to make sure everyone gets their question answered.
How easy, asks Cool how easy is it to complete the £3,000 challenge? What is the success rate on your record?
Well, I'd say nothing in trading is ever easy. I think it requires discipline, and you have to. I think it requires discipline and being able to have success in the markets. So, can you repeat the question?
Yeah, what is the success rate on your record? So, I mean, how many people how many people achieve the?
I'd say about 10 to 20% of people pass the assessments, and that's why trading is difficult. It's I'm not going to lie and say it's something that's very easy. In order to trade our capital, in order to trade any capital, that's why we have the assessment phase, and we want to make sure that you can show a level of consistency, you can show a level of understanding, and we don't if you some people might pass because they get lucky, but not a lot of people are going to continue to take money out of the market by being lucky. You have to be very good to do that, and that's why we're backed by the hedge fund, because when we give people live funds, those are our funds and the hedge funds funds, and they want to know that you can be responsible trading those funds, and hopefully you can show that you have the skills to get even more funds from the hedge fund, and hopefully a side deal with them trading funds with the hedge fund directly.
So you need to have some skills. Perfectly.
Yeah. It's there's that, I guess that's why FTMO has 2 assessment fees, because there's probably a large amount of people who probably try to game the system and get lucky, and you can game the system once, you can maybe game the system. It's hard to game the system twice, and if you get lucky once, it's hard to get lucky twice.
Is the trading done on your platforms, or can you use any trading account to trade on?
The trading is done on Scandinavian capital markets platforms, MT4 and CTrader. Please come check us out or email me for any questions. Happy to send you some demos, and you can check out spreads and trading conditions.
And the kid asks, is there a criteria on how often you must trade? Does it have to be every day, for example, or once a week?
No, we have no time limits, no time constraints, no minimum trades, no maximum trades, none of that. So I think that's a huge benefit that we offer. Like I said, sometimes you need to have a minimum of 50 trades where you have to make 50 trades. Sometimes you have a minimum of 10 trading days or 20 trading days where you have to place one trade on each of those days. And we don't have any of those restrictions.
Okay, Ashok's asking, on the trial packages, once you reach your target, do you get your fee refunded?
We don't have the free refunds available with our program. It is something we're looking at, but every program is a little bit different. The free refund definitely can be a nice little incentive over there. So I understand why you're asking about that. But shoot me an email and I'll let you know if that's something we add in down the line.
John's asking, when are the profits paid out?
Once you go live and you make some profits, you can request a withdrawal and we'll happily pay you out. I would say that's something you want to do is withdraw your funds and ask for it, because I've seen lots of people pass. They make a pretty good chunk of change and they don't ask for a withdrawal, and then all of a sudden the market or the trades go against them. So that would be another tip. If you make money, take it out.
To turn it into real money. Is there trading in equities?
There is no equities currently. Something we're looking at maybe at the end of 2023 is adding equities as CFDs, contracts for difference, but none at this time.
NQ, SP, and RT futures, are they asking, John?
I didn't understand the first part, but there's futures as in there's US 30, there's US 500, there's some indices, there's oil in there. They're in there as CFDs, but not as futures contracts.
John asking what the assessment process is again. Well, it's
you would purchase the assessment, whichever package it is. You would hit the 10% profit target on whichever package you purchase, and then you go to live capital right from there.
And it doesn't matter if you did that on day 2 or day 22.
No, exactly.
That's what that strikes me as being very fair in this whole offer. Peter's asking now. Peter, I asked, can you trade options through the platform?
We don't have any options just yet. That would be sometime in 2024 if we get there.
How long is the 20% discount valid for? Is there a time limit that people can use?
I don't know. I'll say probably until the end of February, but send me an email and I'll be happy to clarify that. So because I said the end of February over here, I'll make sure that we honor anything until the end of February. Please feel free to send me an email. Otherwise, then I can see what we can do.
Mohan's saying, so 80% fail then. This is the success rate, people that passed the process. So you indicate about 10 to 20%, which really echoes.
Everybody thinks they're a trader, but only a few can really make money in the markets. That is very true. So some people pass on their first try. Some people try and try again, and they pass at some point. Trading is about persistence. It's about persistence. It's about time. It's about your ability to last through storms in the markets, through the ups, through the downs. So I'm going to be honest, only a few people can really truly do that. Lots of people can get lucky and make some money, but not everybody can be good every day.
Okay, just going quickly through the questions. This is great. I'll drop Mike an email in the coming day. But Graham, that's good. He's going to send you an email. Jean from France says, "Do you have a futures trader program?"
We don't have futures at the moment, but send me an email and I will let you know when we do, and I'll keep you posted for that.
George, once funded, is it a real account or a demo account that you allocate?
With us, it's live accounts. Yeah, you go live. It's Top Gun. You're behind the wheel. You're flying. It's real.
Top Gun. Let's take this, maybe the last question from the kid. How many people try your system per year? Do you have any numbers?
It's probably we're not a huge company just yet, but it's probably a couple thousand.
And a final question on the question board: what is the minimum you need to start your program? That's from
$250 gets you a 25K assessment.
Fantastic.
That is the lowest where we start.
We have whistled through the questions, guys. I'm sorry it's been so quick, but we've got a lot of information there. Tremendous. Now, Mike's back tomorrow. You're coming back tomorrow, so
I'm back tomorrow. I'll probably be saying the same thing over again, but hey,
there'll be
more
some
questions.
But we'll have some more time for chat. And again, there's always different people on each of these days, so we want to make sure we can communicate with everybody.
I want to thank everyone for listening for this hour. My wife doesn't listen to me for this long, so thank you everyone for listening. Thank you everyone for staying, and thank you for all the questions.
A mini Buchbinder in the back there needing some attention from Daddy as well, so we won't keep you any longer.
Yeah, my little dude. He's almost 10 months old. He's lots of fun.
Great. Well, off you go. Thanks for coming to join us, Michael, and very interesting. So we'll see you again tomorrow. Thanks again.
Thanks everyone. Bye-bye.
Okay, there we go. That seemed to go quick that hour, but as always, you can go and watch the replay, or come again tomorrow. Michael will be back at 3 p.m. tomorrow.
At my email.